Thank you for joining us again on Frontier Opening Bell, a program of Frontier Africa Reports. With us this morning, we have Ali Kansachu, the CEO and founder of Rich Frontiers Management at Nairobi, Kenya, Bosun Omofaye, executive editor at Frontier Africa Reports, and we've got Onyeka Ijoma, industrial goods analyst, Vetiver Capital Management. Thank you guys for joining us on the show this morning. Let's kick in first with the Frontier Africa closing bell indexes rather. Nigeria was negative 0.07%, Ivory Coast negative 0.74% on Tuesday, Egypt positive 0.31%, Nairobi Stock Exchange in Kenya down by some 0.25%, and JSE in South Africa positive by some 17 basis points. Let's check out what we have on the macroeconomic front in terms of stories from eastern part of Africa. We begin with Kenya's weighting, which is now Kenya's weighting in the MSCI Frontier market up by some 9.49%. Cooperative Bank gets some 8 billion shillings loan. Kigali and Rwanda is back on lockdown, and Air Tanzania company strikes a business deal with Air India, while we have the banks in Kenya losing some $11 million in card payments revenues to the telcos. Ali, let's get your thoughts on the Morgan Stanley Capital Index there. What are your thoughts on what has panned out in that space?
So that's a very interesting development, and I think is a positive signal because you have so many people who just mimic that particular index. So any increase in weighting should translate into incremental new demand at the Nairobi Securities Exchange. Of course, the NSE has a very high quota of international demand. About 50% of daily turnover is international. However, the trend in the last 12 months has been a downshifting of international buying and a reduction in the ratio that we've seen them holding in banking shares particularly. But overall, this is a positive development. Also yesterday, I noticed the chairman of the Nairobi Securities Exchange, Mr. Kiprono Kitoni, was talking about a possible divestment program that the NSE had proposed to the Treasury of up to $3 billion of government stakes in state-owned enterprises. And I think that will be also a positive catalyst if they get it right. If they don't get too greedy, they sell it at the right price, and they bring shares to the market, which would excite the average shareholder. So both, I think, are positive developments for the NSE. $75 million SME allocation to Co-op Bank. You know, this has been a trend we've seen in Kenya for quite a while, that international players are keen to tackle and fund and provide liquidity to the SME sector in the Kenyan economy. This is the most dynamic sector in Kenya, and it's good to see that liquidity is being provided to them. It's typically done through banks, and Co-op, of course, has a niche of SMEs. The cooperative movement is a substantial one in Kenya, and this has been Co-op Bank's competitive advantage and has lifted them into a tier one bank, as we know. Kigali lockdown, this is a little bit counter trend when you compare the numbers to Kenya, where we've seen a sharp slide in test positivity. Rwanda has not, and you know, Rwanda, it can be a little bit Chinese in its responses, aggressive, ahead of the curve. So obviously they're trying to nip this in the bud, but naturally it has ramifications for the wider economy, and we should keep an eye out on that. Obviously, what we've seen overall in the COVID situation in Africa is a sharp slowdown in South Africa, which was driving this second wave, but we've seen a spillover into other jurisdictions, adjacent countries to South Africa, Zimbabwe, where it's clearly off the charts, where a minister passed away, Malawi, those sorts of countries, and then in West Africa, where, obviously also in Nigeria. So, it's not clear what it is, but it seems to have spread. And South Africa seems to be less of the dominant infection player. And then finally, this whole battle you were mentioning between banks and telcos. The major telco here we're all talking about is Safaricom. The major telecom business that we're referencing is M-Pesa. It is dominant. I think M-Pesa made more money than all the banks put together last year. And we'll continue to see them nibble at the bank's profits. The banks in Kenya were pretty clever and integrated themselves into the M-Pesa ecosystem. But essentially, given the number of subscribers Safaricom has, M-Pesa is the dominant party in that space. And they continue to look to leverage the banks in a collaborative manner, but it will not stay collaborative forever.
And now it looks like they're expanding into Ethiopia, actually. Well,
yes.
Kudos to them. Let's quickly move now to West Africa. Bosun, I'd like you to speak now to issues that we have around the African Central Bank space. It says there's no policy space for African central bankers to fight the recession, and IEA is now switching its views on global demand for oil, saying some 5.5 million barrels per day. Increase now to some 96.6 million barrels per day for the year 2021. Of course, you have a couple of other stories on that trade. But Bosun, what do you make of African central bankers' focus or the challenge before them at this point in time, given what Bloomberg put out yesterday in their stories?
I think that report, thank you, Tim, I think that report from, I think one of the top officials of Standard Bank in South Africa, looking at the monetary policy meetings of the African Central Bank is starting with Nigeria Monday, Tuesday next week, South Africa's SARB, Egypt is going to hold a similar meeting. Is that central bankers are stretched around the world, and even if you start from the US Fed, Jerome Powell late last year spoke about, look, they look inside their toolbox and they don't have any tools left. So their toolbox empty as far as monetary policy is concerned. So they throw the ball back at the fiscal authorities and say, look, you need to do something. So if you take on Janet Yellen's congressional clearing yesterday by the Senate, she also spelled, this is a time to do great spending on the fiscal stimulus. So there's all talking about why the government at the center have to do all it takes right now. And that is why the Biden administration is looking at close to another $2 trillion US. So the monetary policies, the monetary authorities, look, the central banks, every central bank have printed money to support their economy. And that's the truth. And that's why there's so much excess liquidity everywhere in the world. Every central bank has printed money fast and furious to make sure and there's a limit to which you can print money. Okay, so there's a limit at which you can do treasury bills and what everybody's borrowing fast and furious everywhere, locally speaking. So there's a huge mountain of debt sitting across frontier African central bankers from South Africa to Kenya to Nigeria to Ivory Coast. The debt is piling up every day. So there's a little monetary policy we do. I just hope that the fiscal authorities across the continent will take the reins of leadership by this time and find a very creative way. Look at Kenya, look at Nigeria. The whole issue about state-owned enterprises that are crippled that you can't bring to the market. Look at the whole idea of what the Kenyan market authorities are doing. Try to appeal to the government, let go of some of these state-owned enterprises, let the market decide, sell them, do the same thing in Nigeria, do the same thing in Ghana, do the same thing in Tunisia, Morocco, do the same thing in South Africa, and you will get the best of, we'll get the better of it.
Ali, you agree that, or do you agree with Bloomberg now that the central banks have used up their interest rate ammunitions, given the way they, eased aggressively during the first instance of the lockdown in March 2020?
Yes, I think they did exactly what Janet Yellen was talking about yesterday, which was they went big early, and in any crisis that tends to be the best response. But what it does mean is that you don't have any more bullets to fire. And I think, therefore, Bloomberg is stating the obvious. I mean, I don't see how we can take interest rates much lower. I, however, believe that we're going to see lower interest rates in the Western economies. I think we'll see negative rates in the UK. I think Europe will go further negative. This is the only way these countries can get out of the debt to GDP ratios and get paid to have this huge debt to GDP pile. And I think that might assist possibly towards the end of the year to allow us some extra room in terms of interest rate reductions, but it's at the margins. We've shot the big bullets, the big guns came out, and now we really have to look at other ways to resolve and encourage the recovery.
I mean, the conversation is seemingly the same all over the world. Onyeka, let me get you to speak to the stock exchanges stories. NSE clearing or closer to launch ETDs, and of course with NG clearing as the Securities and Exchange Commission gives approval or gives its nods to that. Then the M&A between Chemical and Allied Products PLC and of course Portland Paints. What do you make of this development, and how much of impact is that are these two key stories likely to create in the capital market space in Nigeria?
Thank you very much, Temple. I think first off, we already seen the impact of the announcement from CAP and Portland Paints on the market. Yesterday, Portland Paints was up almost 10% day on day on the NSE, following the announcement of the merger between CAP and Portland Paints. And basically, we're just seeing a consolidation of strategic business lines for the UAC, for the new UAC management. Since the acquisition of majority stake in this private equity firm, I seem to forget the strategic review of all the operations of BTN, and they are looking to consolidate the ones that they consider to be very key to the survival of the group, and they are looking to dispose of the ones that they do not deem very important. Now, paint is a very strategic is very strategic to the portfolio of UAC, and we see that they are trying to basically merge together CAP, which they own a majority stake in, and Portland Paints, which they own a majority stake in. And the positive for minority shareholders is that they are of course going in at a premium, $2.90 per share, or about 1 TAP share for every 8 Portland Paints share. And at the moment, even after the 10% rise yesterday, Portland Paints is still trading at just above $2.60, and so there's still room for more upside following the announcement, given that the merger in itself places a firm valuation on Portland Paints in the near term. The quarter-day meeting is going to happen very soon, and I expect that it will pass without any restrictions. On the NSE clearing house, it's actually very good news, and this is something that the market has been clamoring for a while. But when I joined this market, one of the first things I noticed was that it was not very deep. As a young finance student looking to join investment banking, you do a lot of preparations, you do a lot of trainings, like modeling, in derivatives, and understanding vanilla instruments, and you understand how critical all these different instruments and all these different products are to the entire ecosystem of the functioning capital market. And here we see that when we came in, we were able to see that there was very little in the way of short selling, in the way of options and futures trading, and also in forwards trading, which sort of limits the levels of activity that you see depending on the economic cycle that the economy is in at a particular point in time. This the approval by the SEC of the Energy Clearing House will kickstart a derivatives revolution, and even though I expect uptake to be quite slow initially, we will see an uptick as the need becomes even more evident for for capital market operators. Just look at the recession. Just look at this recession and this pandemic. By the time when investors started to expect the recession and started to expect this then sell-offs in the market due to the COVID-19 pandemic. That's at the start of the COVID-19 pandemic. Investors were looking to take short positions. However, that was not possible in this market, at the time. And we basically saw just investors just pull out. So the activity was leaving the market rather than just taking an opposite position in the market. And also, I definitely believe this is positive.
I couldn't agree more, Onyeka. Thank you so much for this very good analysis. I mean, it looks like also the competition that we're seeing among exchanges in the Nigerian market is also helping these whole rapid developments and reforms in that space, in the capital market space in Nigeria. For the sake of time, let's quickly switch now to the South African markets. Zambia is buying Glencore's Mopani copper mines for $1 initial down payment, of course, for the whole of $1.5 billion. Then you move to South Africa, where this SA Heineken cut some 7% of workforce on the whole alcohol ban. Eswatini extends validity of trading and liquor licenses to March 31. Let me come to you, Ali, again with these developments in Kenya, in Zambia, and between Zambian government and Glencore. They're paying just $1 in down payment for the mine. I mean, it's a pain for them that the blue chip company is actually exiting their markets at this point in time.
It's a very interesting development for many reasons. So firstly, it's being financed by a Glencore associate company in the British Virgin Islands. They're providing the $1.5 billion. They are recovering their funds via the sale of the copper from the mine. I think that's the actual collateralized security component of the trade. The problem for Zambia is going to be this: they're currently in kind of negotiations with the IMF, which they're trying to kick down the road until after the election. They want the freedom to be able to go big ahead of the election in order to win it, I suspect. And the issue here will be whether, adding $1.5 billion of debt to an already precarious debt to GDP ratio is going to be acceptable to the IMF. I don't think it will. But interestingly, for Zambia, right now, copper prices have been outperforming to the upside. Warehouse stockpiles are at multi-year lows. So one can forecast that the copper price will remain good, and therefore, for the foreseeable future, 12 to 18 months, this probably works as a good leveraged buyout for Zambia. The complexity will be, as I said, the whole thing with the IMF and the additional debt that's being loaded on the Zambian sovereign balance sheet. So we've got to keep an eye on that. The news that you had about Heineken, this has also been a complaint made by Sam Miller as well. This is because the South African government, when they saw the surge in cases, wanted to reduce the load on the hospital and medical services, and therefore banned alcohol sales, came down very hard because there are a lot of cases of hospitalizations related to drinking. But you're now seeing the consequence of that very directly in these cutbacks in the workforce. So this is precisely the quid pro quo that a hard lockdown engenders, and the decisions that need to be made from an economic point of view. And finally, Eswatini's been hit hard, so they're clearly, taking it very seriously and maintaining that lockdown, maintaining the alcohol ban for longer.
Okay, let's now finalize our show today with the Northern African markets. Afreximbank has put some $2 billion on the table to help secure the vaccine, COVID-19 vaccine for 55 African Union members. And then you have the vaccine pre-orders now taking effect by the AMSP, and AMSP in this case is the African Medical Supplies Platform. Bosun, how significant is this development for the African economy at this point? Bosun, your audio is down. You're muted.
My apologies. Sorry, I was just talking about, this is a very significant story. I think there's a further details as we're live now into this conversation. The cost of each dose of this vaccine coming from AstraZeneca will be between $3 US and $10 US. That's what Afreximbank is negotiating, helping with the African Union, trying to negotiate the 270 million doses which has been secured. Which is most likely a single dose. Again, considering the costs here in Africa, if you're going to take 2 doses, you're looking about a double digit in dollar terms. So the news just coming through from Reuters as we speak right now is that it's going to be about between $3 and $10. It's been negotiated well downwards from the initial cost of about $20 or $30 per dosage, and that is good news. I think I want to say a very, and I'm sure Ali will agree, and Onyeka, that the Afreximbank under Benedict Orama has really tried, not just being a trade finance facility, DFI, but also supporting this virus vaccine across the continent. That's a good one there for the African continent, Afreximbank, and working very closely with the African Union and other parties.
I agree with you both, and there's a whole lot that they're doing at the Afreximbank. In terms of AFCFTA and Africa integration, one key point I can't forget from Benedict Orama is the fact that they're also funding the clearing and settlement system structure for the whole of Africa. Onyeka, let's quickly get your thoughts on how these will help the macroeconomic space and engender some form of confidence for investors going forward.
Yeah, Tempo. I think we've been clear right from the start that the only thing that would drive normalcy in the global economic market is the vaccine and an effective and efficient distribution of the vaccine. And it's initially we got reports that due to delays in production, Africa some countries in Africa might be getting the vaccines closer to 2022 and 2023. So the quick, we've been able to secure quite a number of vaccines using the pre-order system quite quickly, and this will be very positive for the overall the African economy. We're already seeing second waves hit many sub-Saharan African countries very badly. SA is still in their tier 3 lockdown, and which is limiting how much the central bank can do to influence economic growth. We're seeing other countries going to lockdown. I think Kigali, Rwanda, recently announced that they'll be going into lockdown also. So definitely we do need this vaccine to be distributed very quickly. Yeah.
Okay, we've got about a minute to the end of the show. Ali, you have a final thoughts on Egypt and Siemens inking a deal on hydrogen energy for the energy mix?
So I think we've spoken about Egypt before. I mean, they're really at the forefront in terms of making what I would call great risk-adjusted investments, and I think this is just part of that whole strategy. There is a tremendous interest in Egypt as we speak. The challenge for Egypt, however, will be interesting because we've seen a huge surge in food prices in the last 12 months, particularly in wheat. Egypt is the biggest importer of food on the entire continent. So the one fly in the ointment for Egypt right now that needs to be watched is, I think, food prices.
Thank you so much. Thanks a great deal, Ali Kansachu of Rich Frontiers Management in Nairobi, Kenya. Thanks for your analysis on the show this morning. Bosin Amofaye, Chief Executive Editor at Frontier Africa Reports. Appreciate your thoughts. And of course, Onyeka Ijoma, Industrial Goods Analyst with Vertical Capital Management. Thanks a great deal for your analysis on the show this morning. I'm Temple Ashaju. Thanks for being a part of the program. I'll see you next time. Bye for now.